How are you guys doing? This is Ryan. Welcome back to the channel. Today we're going to be talking about what is my stock portfolio strategy for my $124,782.30 I have in the market right now and my 6 different trading accounts. I think on this channel I don't always kind of go over like how to get started in the stock market and things like that. I think it's kind of monotonous. There's a lot of other good videos on YouTube to watch for that. This channel is more about following an investor through his journeys and his mindset. But I do think this video would be really good for people who are just starting out to invest because they can go through my mind frames as to how I ended up building the account to the size and strategies that I use. The stock market is one tool I use for building wealth. I also invest in real estate and growing businesses and a few other odd investments. But today is specifically about the stock market strategies that I use in my different accounts. So with that said, let's jump into the video. Alright, so I'm 31 and I've been in the stock market really for about 6 or 7 years, and I use a lot of different strategies. And to be honest, most of my investing is very passive in the market. I have both Roth IRAs and IRA accounts. A Roth IRA is where you pay taxes today, so you don't have to pay them in the future, and an IRA is where you defer those taxes to the future. So the majority of my portfolio is in those accounts. I have roughly about $75,000 in tax sheltered accounts that just buy ETFs. ETFs are exchange traded funds, and they usually hold a basket full of assets. So they're really good about diversifying you into a bunch of different assets so you don't get stuck in one stock that may do well or may not do well. And this type of investing really helps me sleep good at night. The Roth account has about $53,000 into it, and that account really focuses on stock investing into the United States, into foreign countries, into high growth, into dividend. It's diversified in all different things like that. On the other hand, my IRA is actually invested into something called the all-weather fund that was made popular by Ray Dalio, and I made a video about it in detail about this. And I actually had a subscriber come back and comment. They want to know how was the all-weather fund doing during this market crash. And I didn't even look at it because these accounts I just don't really worry about it. I invest into them every month, every week, whatever it is. And very interesting enough, the S&P is down over 10%, but the all-weather fund is up roughly 6%, which is pretty cool. And for me, a lot of my investing you'll see is very experimental. I want to see what works, trial and error, reading what other people say works, and see what really aligns with my philosophy. So I really like the all-weather fund for maybe when I get older and my portfolio is really large and I don't want to stomach seeing it go down 38% being all in stocks like we saw this year. When I'm much older, maybe when I'm like 85 years old. I think in my 30s, 40s, 50s, I'd be okay with seeing my portfolio drop by 38%. And to be honest, it didn't really bother me this year. I was more excited to buy more stocks at those prices because even though it's a $124,000 portfolio, it's really not that big.
That's what she said.
Relatively, like you can't retire off it. Some people have smaller portfolios, some people have bigger portfolios. This video is not really about that, but this is just what is a guy who is 31 years old that has about $125,000 in the stock market, what's his strategy, what is he doing, and how's it working for him? So if you want to know more about these particular accounts, I'll put a couple videos down below where I go in depth on what is in the accounts. I made a video a while ago when I just broke $100,000 into the market. In that video I really go over the Roth IRA account. In a previous video I did an in-depth analysis on the all-weather fund, and I may make more videos about it. The video actually did pretty good. Ray Dalio's a great investor and very popular, so a lot of people have interest in this, so I'll probably make more content about that. Let me know in the comment section if you'd like to see that. So the next portfolio I want to talk about is one I've started while on this YouTube journey. Probably started about 6 or 7 months ago, maybe a little bit more than that. And that's my Robinhood account. And this is really my attempt to outperform the market. Again, this is trial and error for me. Can I do it? Is this a good investment for my time? If I can't beat something like the S&P 500, is it really worth my time doing all this research into companies and investments if I can't even beat the market? If I can't beat the market, maybe I'll just keep on putting money into the S&P 500 and go find other ways to make money, like buy more real estate or grow businesses. But so far, I have to be honest, I'm pretty happy with the results. Even in this horrible market, I'm still up 27%. So I think it's really important to look at the strategies I'm deploying into this, and it's important for me to look back onto to make sure I keep on making wise investments to outperform the market. And a lot of subscribers have come to this channel because they have interest in this account. And a lot of people just like to do their own stock picking. They want to be active investors. They want to be a part of the market. They want to learn this machine. An investor I really liked who I used to read a lot named Jim Rogers, he created the Quantum Fund with George Soros back in the 70s. In the 70s, the stock market was in a bear market throughout that decade, but yet he performed. He made thousands of percent, became a multi-millionaire and retired and traveled the world. And he really fell in love with investing for the same reasons I've fallen in love with investing, because if you can kind of understand how the world's gonna work and deploy money in that way, you can make money. So you're just learning about the world and putting money in ways that you see the world's going. At that level, it's not just about money, it's just understanding the world that you live in, which I think is really cool. So this Robinhood portfolio is at $44,334.08, and this is my own Ryan Giffen investment fund. So these are the strategies I'm deploying into this portfolio. My biggest holding I'm going to categorize into something called disruptive innovation, disruptive growth. When I started this account, I thought it was all I was really going to do was invest in things that are massively disruptive. But to be honest, the volatility can get to you, so I've invested in other things, but it is still my majority holding. I have roughly $19,191.64 into assets I claim to be disruptive growth moving forward. That makes up 42% of the portfolio. Those investments are into things like Tesla, Arc Genomic Fund, which invests into genomics, which I'll probably make a video all about that in the future. I'm so fascinated by the breakthroughs that we're seeing in human genomes that science is able to do to make medical improvements. And I really believe the medical industry is going to change massively throughout our lifetime. I believe that. I also consider Square to be a disruptive technology just because they're in payment services, and the big reason I put them here is because Jack Dorsey's very smart and he's doing a lot of things to help the company lay a groundwork for cryptocurrency and payment services. You're not really hearing other big players make room for this, and that leads me to my next investment, which is cryptocurrency, which I have roughly $7,700 into Ethereum and $2,500 into Bitcoin Cash. Those are my two favorite cryptocurrencies, and I've made videos about cryptocurrency in the past. I'll have those linked in the description below, and I'll be making more videos in the future as to why I'm so bullish on it. And whether you like crypto or not, it's very likely to keep on outperforming the market. So having your money grow fast, it's a tool I like to use. So if this was a Ryan Giffen ETF, like that would be part of it. It would say 42% into disruptive innovation. The next biggest category I'll put in this portfolio is dividend growth. Dividend growth is so popular. It's made popular by people like PPC Ian, Gen X Dividend Investor. He's a bro of mine, but I put him on the level of PPC Ian, JMac Investing as well. These are strategies that they really deploy into their portfolio. And it's really a cool way to invest because it's such passive ways of making money. You hold great companies that cut you a check every quarter, every month, whatever they're set up to do. And I have $15,699.67 into dividend growth companies. That makes up about 36% of the portfolio. Now, dividend growth is nothing like disruptive technology. It's a lot slower, but it helps lower the beta in the portfolio. I don't get these wild swings of being down 20-30% in a day. And I love that they just throw off cash flow, which for me, a longer term goal is to have a lot of dividend growth stocks that throw off hundreds, if not thousands of dollars every month or so. And I can take that money and I can wisely put it into disruptive innovation or something else that I think will grow faster. That's my strategy. Most people want to use their dividend growth to buy more dividend growth companies. Mine's, I just want more cash flow to buy things that'll grow faster, in my opinion. It's hard to find really good disruptive growth innovation investments. You'll see I only really have a handful of them, but in this account I probably have 10 or 15 dividend growth companies because these are all big names like Pepsi, 3M, Johnson & Johnson, companies that we all know and love that have been around forever, and we consume their products and we know they're going to be here for a long time moving forward. So definitely not a huge risk investment in my opinion. And I should also take this time to say this is not financial advice. If you can't tell, this is just what I'm doing for entertainment purposes only. If you're enjoying the content, subscribe to the channel, give the video a thumbs up, I appreciate it. So my strategy for picking a good dividend growth company, it's usually a company that's been around for a long time, that's been paying a dividend consistently for a long time, and that can raise that dividend for shareholders. So you buy it in, let's say you're getting a 3% yield, but they raise their dividend every year. They're giving you a 5% raise, 10% raise, whatever it is. If they're having a good year, they've shown throughout history they can consistently do that, which is amazing, to give your shareholders raises for 25 plus years, 50 years. It's absolutely outstanding. And then other metrics, you want to look into dividend growth of companies. You want to make sure not only do they have a good business plan, but is their payout ratio sustainable? Typically, you don't want to see companies paying out much more than 60% of their net income out to shareholders, because they want that money going back into the company and still creating some growth for the stock and just not giving it all that money away. You need to keep some of that money in to grow the company moving forward. A business always needs growth, or at least one I would invest into. The next category is 16% of the portfolio, and that is big tech growth. I don't put them into disruptive growth because to me, these are companies that already disrupted the world. They've changed the world as we know it, and they will likely outperform the broader market because their best growth days are probably behind them, but their product is so good, it will still get adopted throughout the world. And to me, those are companies like Facebook, Alibaba, Twitter, Applied Materials, Microsoft, and I even threw Five Below in here. They're just growth. I just like the company and I see them growing everywhere. So I have $7,068.54 invested into bigger tech and growth companies. So that leaves us with roughly about 4% left. That's been more of me recently. I'm becoming more okay with growing this next part of the portfolio, and I'm gonna call this next part of the portfolio the black sheep. The black sheep. We're in a pandemic right now, and there's some businesses that are getting absolutely destroyed. Absolutely destroyed. And I have 4 companies that are just so impacted by the whole virus epidemic. It's a smaller speculation, but I feel pretty confident in it because as long as these companies don't go bankrupt, they're likely to recover back to where they were. And that would be a 2x, 3x, even 4x move for some of these companies. And those companies are, one you probably never heard of, it's called WeBull. They're in my industry. I'm in the restaurant business, which is being destroyed. They make commercial restaurant equipment and they're down from about $20 a share all the way down to $5 a share. I wanted something in the restaurant business, and this is a company I do business with. I think they'll recover. They make great products. And then also I'm holding American Airlines, which of all the airlines has the best balance sheet. But because they have such a good balance sheet, they're less depressed. So I also have some money into Delta, and then of course, probably like everyone, their grandmother, I do hold some Carnival Cruise Lines, which actually I bought more of. So this is only roughly about $2,000. And the reason that I really wanted to make this video, because so many people have reached out to me, this is a very good thing for the market because people aren't rushing in the stock market because it's going up. A lot of people usually have fear of missing out when like crypto is going up really high and they want to catch the train. But so many people wanted to buy stocks when it went down. That's very interesting. But these investors, they all wanted to buy like what's gonna go up the most, you know, and I feel like they're so focused on the black sheep. When you look at my portfolio, how can I say go buy Carnival Cruise Lines? You know, what do you have in your retirement accounts? How much of the S&P 500 do you own? Like, don't go put all your money into a junkier stock. These are junky stocks. These aren't high quality. And I think this is a real issue that I wanted to bring up in the video. Have a full, broad investing strategy and have a mature portfolio before you start buying junky stocks. Like, buy great quality companies and build a portfolio that you're proud of and you can speak of it intelligently. Don't go ask your neighbor, you know, is it a good time to buy Delta Airlines? So again, I don't make a lot of videos that are just about like the beginning investor, like how to place a limit order or something. I hope a beginning investor would say, you know, Brian really built a mature portfolio of having, you know, tens of thousands of dollars into things that are pretty stable, that will do well over a long time. And he has such a small percentage into these junkier stocks he's speculating into. That's the message I would like to get across in this video. So that kind of summarizes the Robinhood portfolio. Let's jump next into WeBull. WeBull. I love WeBull for free stocks. WeBull has treated my channel very well. I appreciate everyone that's used my affiliate link, and I'm actually gonna have it in the pinned comment below if you want free stocks. So if you want good investor beginning advice, which is not advice, but take free money when you can get it, and it's in the pinned comment. Sign up for WeBull, put in over $100, you can get a stock for like $1,400. I've had people get some pretty big stocks. I've had a lot of people sign up with my referral link. So that's what I pretty much use WeBull for, and now they started paying me in stocks. So I don't really invest in the platform that much. I've bought in a couple things, but I currently have like $300 over there, so nothing to write home about. But great for free stocks. It's a good platform if you want to invest in there as well. The last portfolio is one you may never really hear me talk about that much more on this channel, but I do have a Fidelity account. And I'm not gonna go in depth into the things I buy in here, but I have about $4,500 into this portfolio. And this is a very highly speculative account for me. I buy like OTC stocks. I have 2 in there. One is going great for me, one is going not so good for me, but that hasn't played out yet. And guys, these are highly speculative things. And I don't want to go too deep into detail on them because I don't want to give off the impression like I'm endorsing other people doing this. But this is my entire stock market portfolio. And I hope what people really take away from it, it is really focused on ETFs and large caps. And there is disruptive technology in there, which I'm bullish on. And the thing I'm most happy with so far is the Robinhood account. It's actually proving to be a decent investment of my time. You know, being up 27%. I made an extra 10 grand the last 6 months just, you know, buying things on my phone, plus buying dividend stocks that'll pay me for the rest of my life possibly. But there's also something really to be said about passive investing. Going to work, hustling really hard, making money, and putting that money into the market for a very long time while you're young. Use your youth. If you're younger, kind of like me, I consider myself young, but I'll probably always consider myself young. Use the time on your side. Compounding interest is a real thing. I was showing a friend of mine the other day, if he were to put $350 into the S&P 500 for 25 years at a modest 7% return, he would have $284,000. And he would have only have put in $105,000. So he would have made $180,000 essentially. He was refinancing his house and could lower his payment by that much. And I said, right now I'm not a current believer in like paying off low interest debt when you can get higher yield elsewhere. You don't want to become over leveraged in ways. I don't have a lot of debt. I have a couple mortgages and a car payment. Don't get over leveraged like Grant Cardone or something. But learn compounding interest, learn investing. It is so powerful. Guys, thank you so much for watching this video. I'll kind of wrap it up here. If you have any questions, again, let me know down below. If you've enjoyed the content, hit that thumbs up button, it's greatly appreciated. And also you can follow me on Instagram at rgiffen89. I'll put it on the screen here. I post there all the time. I post goofy stories. Follow me over there, hit me up in the DM section. And I'll see you guys in my next one.